Today's topic is income from salary. It is one of the heads of income tax. So, remuneration received by an employee out of employment from his employer is known as salary income. So, here a person should receive an amount in regular periods or for every month from his employer, then it is known as salary income. So the relationship between payer and receiver should be employer and employee. So when the person is receiving money or salary from the employer, receiving person from the other person, the relationship between two persons, employer and employee, then the received amount treated as income from salary. Salary means basic salary plus allowances plus perquisites plus profits in lieu of salary. So altogether called as salary. Basic salary means the minimum pay which the designation has eligible, and allowances depends upon the company and the employer, which the employer wants to provide to his employee, and perquisites are the fringe benefits which are given to the employee including his family. It is also depends upon the employer and the nature of business or work they are doing, and profits in lieu of salary. So these are the profits which the person will get at the end of his services or at the retirement of services. So these are all together called as salary. Now next is salary payment methods. So there are three types of methods. According to that, the salary is paid to the employees. First is consolidated pay. Consolidated pay means under this method the employer pays a lump sum money without specifying about any allowances and perquisites. When the consolidated pay is given to employee, cannot have any choice for selecting an allowance or a perquisite. So here in the consolidated pay method, the salary is paid in a lump sum amount instead of periodical payments. So here there is no any chance of selecting allowances and perquisites. So the employee has to accept which is paid by the employer to the employee. Next method is salary with the split allowances and perquisites. So it is completely opposite to the consolidated pay. In the consolidated pay, the amount is paid in lump sum amount, but here in the second method, the salary is divided into periodical payments, and allowances and perquisites are also added to the salary. So in this method, the employee can get allowances and perquisites, but employee will not having any chance to select the allowances or perquisites. It is remains same for particular cadre. So the employee will get according to his or her category. The third method of salary payment is personal choice payback. Under this method, the employer will specify how much amount he wishes to pay for an year at the time of joining the duties and also at the beginning of each financial year to existing employees. that means it changes every year. It's not depending upon the cadre, or it is not a lump sum amount. It will change every year at the beginning, and the change will done by employer. For example, a payback of 9 lakhs 50,000. Under this part, salary, let's say 40% salary, employee can choose allowance and perquisites. So salary structures, allowances, perquisites of two employees, same cadre, not be same. So there will be choice for selecting allowances and perquisites. So it cannot be same for each employee, because in the second method the salary was same for cadre, but here in same cadre and in two different persons are getting two different salaries. So it is a personal choice payback method. So these are the three methods. By using these three methods, the salary is paid to employee by employer. Next is allowances. Allowances is a fixed mandatory benefit given by the employer to the employee for a specific purpose. For example, house rental allowance, children educational allowance. The employee can withdraw the allowance, or he can increase or decrease the allowance amount. So it is a allowance means let's say it's a one of benefit which the employer will give employee for his work, for his service rendered to the company, and it fully depends upon the employee. According to his wish, he can decrease or increase the allowances, or completely he can remove the allowances concept from salary. So the payment of an allowance can be either on account of an agreement or a discretion of the employer. So these allowances are prescribed when the employee joining into the services. So according to that, prescribed allowances are given to the employee. So from taxability point of view, the employees can be classified two categories. So for allowances, there are two. The taxability point of view, there are two types of employees: special category employees and general category employees. For special category employees, all allowances received by the following person is fully exempted from tax. Allowances received by Judge of High Court and Supreme Court, allowances received by employees of UNO, allowances received by teacher, professor, research scholar from a foreign country which is SAARC member nation. The exemption is allowed for a period of 2 years. Allowance received by chairman, member of UPSC. So above all these persons who are getting the allowances, those allowances are completely exempted. So these employees are come under special category employees. And general category employee, there is a second type of employee category, that is general category employees. From the income tax point of view, the allowances are classified into three types. So in general category employees, there are three types of allowances in taxability point of view. That is fully taxable allowances, fully tax-free allowances, that means exempted allowances, partly taxable allowances, and unexempted amount is taxable. So these are the three allowances for the general category employees in view of tax, income tax. Now let's see the fully taxable allowances. So dearness allowance is taxable allowance, and additional allowance. City compensates additional DA allowance is also taxable, and city compensatory allowance is taxable. Marriage allowance, family allowance, meals allowance, servant allowance, project allowance, interim relief allowance, medical allowance, lunch, overtime allowance, warden allowance. So these are the taxable allowance. If any employee getting these taxes, these allowances, those are all taxable. See, fully tax-free or exempted allowances. Foreign allowance to the government employees. If any government employee receiving allowance from foreign countries, those allowances are exempted. Any allowance paid by government to an employee working in a foreign country who is a citizen of India is fully tax-free. And any allowance paid to High Court, Supreme Court judges, Chief Election Commissioner, present and former chairmen, and members of Union Public Service Commission are exempted. All allowances received by an employee of UNO and diplomatic and consulate staff of foreign government working in India from his employer. If any getting their allowances, they are exempted. Allowances received by teacher, professor, research scholar, a foreign country which is a SARC member nation, a period of 2 years is exempted. And allowances received by chairperson, a member of UPSC, is also exempted. Now let's see the third typo, that is partly taxable allowances. That means partly taxable allowances means exempted amount is limited amount is exempted, and if there after limit is there any still amount is there, that is taxable. So here three different types of categories are there. General allowances exempted with linked with actual expenditure, and exemption which is does not linked with actual expenditure. So here general allowance, here there are two types of allowances in entertainment allowance and house rental allowances. These two are the partly taxable. Now let's see entertainment allowance from general allowances. Here there is a rule for entertainment allowance because it's partly taxable allowance. So here the rule is unexempted amount is taxable. So if an employee getting this entertainment allowance, the up to limit is exempted. Still beyond the limit, the employee getting the entertainment allowance, whatever the amount is there, it is taxable. So here entertainment allowance is one of the items of deductions allowed under section 16(2) from salary income. So this section is Indian Income Tax Act 1961 under section 16 subsection 2. So according to that, this entertainment allowance is given as deduction, but unexempted amount is taxable. It is not fully exempted allowance. So it is not fully exempted allowance, and this allowance may be given for official purpose or personal purpose. So it depends upon the work and employees employee cadre. So according to that, it may be official or personal purpose. If the actual amount spent is less than the received amount, then the difference amount is treated as taxable income under allowance. So for example, if an employee getting 1,000 rupees as allowance, entertainment allowance, from that if the employees spent only 500, then the remaining 500 is taxable under income. Entertainment allowance is not an income, but it is taxable. If nothing is mentioned in the problem, then the allowance received is to be treated as personal purpose. Now let's see the steps for calculation. Add the actual amount of allowance received to the salary, writing in the statement under the head of allowances. So first we have to add the amount which is received to the salary and under allowances, head of allowances. Calculate the exempted amount of allowances in the working note. So how much amount is exempted, we have to calculate. Then unexempted deduct that exempted amount of allowance under the head of deductions under section 16(2). Deduction is given to only government employees and state government employees. Those are state and central employees. Let's see deduction process. List of the three following. So from these three, least amount is given as exempted. 20% of salary means basic pay, actual amount of allowances received plus receivable, and rupees 5,000. So from these list of these three given as deduction under section 16(2). The next allowance from general allowances, that is house rental allowance. This is one of the major allowance given by the employer to employee. House rental allowance is allowed as exemption, so it is completely allowed as exemption. But entertainment is not allowed. Entertainment allowance is not allowed as exemption. This allowance is allowed as exemption only when the assessee is paying the rent of the house. So it is only given as exemption when the assessee paying rent. So let's see the steps for calculation of house rental allowance. First, calculate the exempted amount of allowances in the working notes. Add the unexempted allowance to the salary under the head of allowances. If employee residing in metro cities Mumbai, Delhi, Kolkata, Chennai, so let's see how the exemption is given. Actual house rent allowance received by employee from employer, rent paid minus 10% of salary. So the rent paid by the employee and minus 10% of salary and 50% of salary. So least of whichever is less. So least of these three is given as exemption. Employee residing in non-metros, that means other cities, the actual house rent allowance received and rent paid minus 10% of salary, and third is 40% of salary, whichever is less. So the least is given as exemption for employee under head of house rental allowance.